Welcome back to Rekt Radio, the one and only show that looks at the digital frontier and sees a vibrant, booming metropolis being built, not a ghost town. I'm Sunny, and folks, the pace of innovation is absolutely breathtaking right now.
And I'm Cole. I'm here to point out that many of those booming metropolises in history were built on swamps and ended up sinking. Let's check the foundations before we get excited about the new skyscrapers.
It's all solid rock, Cole, and the architects are getting smarter every day. Look, we're even seeing a much-needed conversation happening about separating the wheat from the chaff. The CEO of Prometheum, the first US-regulated special-purpose broker-dealer for digital assets, came out and said it plainly. Some of what's happening in tokenization is just unregistered securities and gambling.
Oh, this is rich. The guy from the government-approved walled garden crypto company is telling us what real crypto is? This isn't a helpful distinction, Sonny. This is a regulatory capture strategy. He's trying to frame everything that exists outside his compliant ecosystem as illegitimate gambling. It's a classic move. Define your competitor as the bad guy.
It's not a strategy, it's just common sense. For this industry to mature, we need to be honest. A meme coin with a dog on it is not the same as a tokenized treasury bill. Drawing that line clearly is how we get the big, conservative financial institutions to step into the water. They need a sandbox that isn't filled with landmines. Prometheum is building that safe, regulated sandbox. That's bullish for real-world asset tokenization.
It's a cage, not a sandbox. The whole point of crypto was to get away from gatekeepers and intermediaries. Now the CEO of an approved intermediary is saying the only good crypto is the one that comes through his gate. He literally said his firm is the only one today that can custody digital asset securities for institutional clients under the current rules. It's an attempt to build a monopoly under the guise of investor protection. It's the opposite of everything this technology was built for.
It's called evolution, Cole. You build bridges to the old world, you don't just blow them up. But if you don't like the government-approved stuff, let's talk about pure, permissionless innovation on the frontier, the kind of thing that makes this space so exciting. We're seeing a massive push to unlock the biggest, most dormant pile of capital in the world, Bitcoin.
Oh no, please don't tell me we're finding new ways to put the world's most secure, simple, and robust asset at risk. I'm almost afraid to ask.
It's called BTCFi, and it's a revolution. Think about it. Hundreds of billions of dollars in Bitcoin just sitting there in wallets, not doing anything. Now, chains like Sui are building the infrastructure to put that Bitcoin to work. They're creating ways to wrap Bitcoin and bring it into their DeFi ecosystem. You'll be able to use your Bitcoin as collateral for loans, provide liquidity, earn yield, all without selling your keys to the kingdom. It's unlocking a universe of utility for the king of crypto.
You say utility, I hear unnecessary complexity and catastrophic risk. This is like taking a solid gold bar and deciding to use it as a component in some experimental high-speed engine. The entire beauty of Bitcoin is its simplicity and security. Now you want to wrap it in layers of code, trust it to a bridge that can be hacked, and throw it into a DeFi ecosystem on a newer, less battle-tested chain? We are actively creating new points of failure for the safest asset on the planet. It's a house of cards built on a bedrock foundation, and the house is the part that's going to collapse.
But that's where the innovation is. Sui is building things like native, trustless bridges. They're focusing on performance and security to handle this exact challenge. You can't just let the single largest asset in the space sit on the sidelines forever. Integrating it with high-performance smart contract platforms unleashes its true potential and brings its unmatched liquidity into the world of active finance. This is how the ecosystem grows and becomes more interconnected and powerful.
Interconnected is just a friendly word for contagion risk. When the bridge gets hacked or a smart contract gets exploited, and it always does, all that wrapped Bitcoin will become worthless and the fallout will be massive. It's an attempt to chase yield by exposing the crown jewels to a level of risk they were never meant to have. It's financial engineering at its most reckless.
Speaking of reckless, that brings us to the most important story of the week, maybe the year. The trial of Roman Storm, one of the developers of Tornado Cash, has begun. And Cole, this isn't just about one man. This is a fight for the future of privacy and open source development.
A fight? Sonny, it looks more like a public execution. This isn't a trial. It's a message being sent. The federal government is trying to hold a developer criminally liable for the code he wrote and published for the world to use. They are deliberately trying to crush the idea of financial privacy and scare the living daylights out of every single developer in this space. I have a very bad feeling about how this ends.
But you have to have hope. The core of the defense is simple and powerful. Writing and publishing code is a form of speech, and it's protected. Storm and his team didn't control Tornado Cash after they deployed it. It was an immutable smart contract. They can't be held responsible for how criminals used it any more than the inventor of the car can be held responsible for every bank robbery getaway. A victory here would be a landmark decision protecting software developers and the very concept of privacy in the digital age.
And a loss, which feels terrifyingly likely, sets a precedent that could chill innovation to the bone. If a developer can be thrown in jail because someone, somewhere, used their open source tool for illicit purposes, who in their right mind would ever build a privacy-preserving technology again? It means the only things that will get built are tools of surveillance. The prosecutor's argument is that they created a tool knowing it would be used for laundering. That's thought police territory. It's not about what the tool is, it's about what they claim the developer's intent was. It's a terrifying slippery slope, and Roman Storm is the one being pushed off the edge as an example.
It's a terrifying prospect, I agree, but the crypto community is rallying. There's a strong legal defense. We have to believe that the justice system will see the difference between writing code and committing a crime. This is a moment where the entire industry has to stand up and fight for its core principles. The outcome will define the next decade of development in the United States.
The outcome will define whether developers in the United States have a future, or if they all need to move elsewhere. The government isn't known for its nuanced understanding of technology. They see a nail and they're coming at it with a sledgehammer. I'm not optimistic.
Well, when the human drama gets too heavy, there's only one place to turn for clarity: the cold, hard data. Let's pull up the technicals for Bitcoin on TradingView and see what the market itself is telling us.
Ah, yes. Let's escape the grim reality of the justice system and retreat into the comforting fantasy of charts. What are the magic lines telling you today, Sonny?
I'm looking at the one-day chart, and the story is one of profound underlying strength being tested. The overall summary is a buy, which is a great place to start. But the most powerful signal is coming from the moving averages. They are flashing a strong buy. That's the deep current, Cole. That's the long-term institutional conviction showing its hand. It's telling us that despite any short-term noise, the primary trend is powerfully upward.
You're conveniently ignoring the storm clouds right in front of your face. Look at the oscillators, the indicators that measure the immediate health and momentum of the market. They are flashing a sell, a strong one at that. So the rearview mirror is telling you the road was great, but the dashboard is flashing a check engine light. This is a massive divergence. It shows that the past strength has completely failed to translate into present momentum. The rally has stalled and is starting to roll backward.
It's not a stall, it's a strategic retreat to a stronger support level. This is perfectly healthy. When you have a powerful long-term strong buy trend, a short-term signal is often just a dip, a classic buying opportunity for those who have conviction in the macro trend. The market is shaking out the weak hands and the leverage traders before continuing its ascent. This is a textbook bull market correction, not the start of a collapse. It's a chance to get on board before the next leg up.
It's a textbook bull trap. The lagging indicators, the moving averages, lure you in with the memory of past gains, while the real-time oscillators are screaming that the buyers are exhausted and sellers are taking control. The conviction is gone. This is how tops are formed, Sonny, with a slow bleed that turns into a cascade. The strong trend is broken, and you're clinging to a memory.
That's all for this episode of Rekt Radio. I see a market offering a discount, backed by a powerful long-term trend. Stay bullish and don't be shaken out by the noise.
I see a warning sign. The sellers are stepping in, and the long-term trend is the only thing holding on by a thread. Be careful out there. The floor looks a lot closer than the ceiling right now. You've been listening to Rekt Radio.